Guys, I'm excited. We've got Jeff Schneider here with SFS Tax Problem Solutions. Last week, I had Travis Walker on, a wonderful attorney who discussed the differences between sole proprietorship, LLCs, S-Corp, C-Corps, how it protects you, why you may want to go with one over the other. But today, we've got Jeff on. He's going to answer the questions, in my opinion, we really want answered as business owners, which is, how does it impact our money, right? Well, how does it impact us when tax season comes around? So, Jeff, I'm just going to shut up and let you get right into it, man.
Sure. Travis is the attorney, and he tells you what the legal side of things are. I'm going to talk about the tax side. Now, when a new client comes into me, or even an existing client that wants to start up a new business, that's the first question they ask me. What kind of legal entity should I be? Should I be an LLC? Should I be in an S-Corp? Should I be this, that, and the other thing? My first question is, or answer is, you need to see an attorney, because your whole thing is you want to protect your assets, and only an attorney can actually guide you on that, because some businesses should only be certain way.
Yeah.
But that's certain. There are a lot of businesses, or the majority of them, the attorneys will go, whatever your tax guy wants. And we tend to now do LLCs versus incorporated entities. So then we started talking about, and that's really to protect your personal assets. Because these things, you don't want somebody to sue you and take your house, take your car, take your wife's diamond ring that you bought, because they can if you don't have this liability protection, this unlimited protection. So now I'm going to talk about, and I have a PowerPoint slide in a second, that we're going to talk about the taxability of each one. Now, one of the things you have to understand when I go through this slide is that everybody's different. These are just the general rules regarding the tax standpoint, as it says, what legal entity to choose. If there's more than one partner, member, shareholder, I have to talk to both of them, because if it hits their tax return, it could be different for both.
Yeah.
And you have to both agree. And so that causes a lot of problems sometimes. I want to be an S-Corp. No, I want to be a partnership. No, I want to be a C-Corp. And then you have to decide which one is best, or you just don't go into business. Yeah. And that has happened a lot. So let's go on and see if I can get this to work. Oh, there it is. All right. The most common legal entities, and what I'm going to be talking about mostly, are corporations or incorporated entities, general partnerships, limited liability companies, and sole proprietorships. And you can see the list of the other ones. For example, that last one, professional limited liability partnerships. That seems to be the new thing for attorneys. I don't know why, but about 3 or 4 of my attorney clients, all of a sudden, when they send me some paperwork, there's that PLLP on it. It seems to give them more protection besides their errors and omission or malpractice. There's the limited liability partnership. I have an attorney who's that way. Do I know the legal reasons for it? No. Do I care? No. I happen to be an Inc. Why am I an Inc. versus an LLC? Well, because when I created my company, that's what the big thing was. LLCs really didn't come into vogue until the mid-2000s, and I've been around for about 30 years with this company. So let's talk about the different entities. All right. These are the 4 big ones. The sole proprietor, the limited liability company, then there's the incorporated entity, and the partnerships. You see the second row there. The sole proprietor, it files their information on a Schedule C. It's just a profit and loss. There's no balance sheet. That's it. It's just a P&L, your income, your expenses. For a limited liability company, you can be one of those 3, plus you can be a partnership. So you have 4 choices if you're a limited liability company. When you set up the entity, it's called a disregarded entity, meaning it doesn't exist for tax purposes if there's what's called a single member LLC. A lot of people think that you're shareholders of a limited liability company, and you're not. You're called a member. There are no shares in a limited liability company. They're units, and they're harder to take when a creditor comes after you, which is the reason why a lot of the attorneys tell us to be LLCs. So you could be, when you first start out and you're by yourself, you're a Schedule C. Joe is that way, for example. He created an LLC, no other partners. I happen to have an LLC. There are 2 partners. So we are an S-Corp. So you can't be with two partners as sole proprietor. You would have to be either an S-Corp, a C-Corp, or a partnership. And what I mean by general partnership is there's basically two general partners, two equal owners. They can make decisions. That's the difference between a limited partnership, where you may have, like, if you invest in Blackstone, that's a big common one. You become a limited partner, meaning you have no rights. You owe 0.00001% and you get $3 of income. Those are limited partners. But every limited partnership has one general partner. That's required by law. So in this case, you'd be a general partner. You can also elect, so if you have two, let's go take a step back. If you have two members, you become a partnership automatically, unless you elect to be a corporation. Now the decision is, which way do you want to go? Do you want to be an S-Corp? Do you want to be a C-Corp? And what is the difference? And we'll talk about that as we go. So as a sole proprietor, as I said, they're taxed to the owner. You follow Schedule C, everything gets reported on one form, no separate filings. There's nothing with the state. The only time you may get a federal ID number is if you have payroll. And you can have payroll as a sole proprietor, not yourself, but somebody else.
Yeah.
You do not take payroll either as a partnership or as a Schedule C, as a sole proprietor. That's the big fallacy. I want to take payroll. No, just take your money. You're subject to the self-employment tax, and I'll get into that in a couple of screens. All right, Schedule C's, as we said, tax to owner. All right, Subchapter S's, the net income, not what you take out of the company, is passed through to the members based on a percentage of ownership. Now, what is the percentage of ownership? I own 50%, Joe owes 50%. That's percentage of ownership. That's different than a partnership. And I'll get to that when we get over to the partnership side.
So let me ask you a question on that.
Sure.
So let's say I've got an S-Corp and it's you and I, but let's say you're 60, I'm 40, and I want 10 grand, but I'm at 40. Does that mean I have to make sure you get 15 grand before I can take 10 grand?
Yes.
Okay, got it.
So you basically, you did it in a way backwards. You said, I need 10 grand. So you grossed up.
Yeah.
Basically, you say, I have 100 grand. We want to split it. I get 60,000. You get 40.
Okay, that makes sense.
Okay? That has nothing to do with salary. Those are distributions, which is another name for dividends. The reason why they're dividends, they're not dividends, and that's another reason why we don't do C-Corps for small businesses, because it's double taxation. And I'll get into that in a little bit.
So let me just ask one more question. So with that, how is that dividend tax versus, like, I'm paying myself a salary as an S-Corp, correct?
That's right. We'll get into reasonable compensation in a little bit.
All right. Yeah.
But if you take money, the money you take out of an S-Corp is tax-free. Yeah. For example, you make $1 million net profit. It's cash. Let's say cash equal profit. And that's in the bank. You're taxed on $1 million whether you took it out or not. Yeah. So if you take it out, you're still taxed at $1 million. If you take out only 200,000, you're still taxed at $1 million. Yeah. But here's the difference between an S-Corp and a Schedule C. That distribution, that net income, is not subject to the self-employment tax, that extra 15.3%. That is the reason for reasonable comp. Yeah. A reasonable compensation. And we'll talk about that in a little bit. But you see there, a lot of people do not realize, and I would say majority of the people that sit across from me when I talk about C-Corps, Florida does have an income tax. It's just not on individuals. They tax corporations. It used to be on the first after the first $5,000, and then it kept going up. Now it's on the first, after the first 50. So you can make $50,000 and not be taxed. They started that basically because we don't have an income tax on individuals. So they don't want all businesses to come here and be tax-free. They just want the people to be here. Yeah. Tax-free. All right. Again, S-Corps pass through based on a percentage of ownership. C-Corps, we said. Now, here's the partnership issue. Just like the Schedule C or the Subchapter S, you're taxed on the bottom line. You could be taxed on one of three ways. There is profit, there is loss, and there's capital. Let's use Joe's example. He owns 40%, I own 60%. That's a capital percentage. That has to do with distributions or taking money out. but there's also profit and loss. He could be 100% profit and 100% loss, and I get nothing. And I have a couple like that. And you do that for purposes of protection. It's easy in a partnership. It's easier to take money away from a one-person entity or take the assets than it is if there's two. So a lot of times you put a spouse as a 5% owner or 1% owner. You can put your kids that way too. Just give them capital, but you report all the income on yours. So that's how that works. Now, this is easier because on a partnership agreement, you can change that every year. In an S-Corp, it's harder because you own shares, you own units. But in a partnership, you can flip that around anytime you want as long as your operating or your partnership agreement agrees. Now, that's not saying you can change your operating agreement for an S-Corp. You notice I said operating in a limited liability company or a shareholders agreement in an Inc. or a partnership agreement. Basically the same thing, except they're just called different things. And that's where you got to call Travis Walker to deal with.
Yeah. Okay.
You don't know how many people come to me, Jeff, after you set me up, can you write my operating agreement? I go, let me think about this. No. That is a legal document. I didn't even write my own.
Yeah.
I was in a partnership. So let's talk about the next set. All right. Again, Schedule Cs are subject to the self-employment tax. Now, what is self-employment tax? If you recall, if anybody in your audience has worked for somebody and they get a W-2, they have three things taken out of their paychecks besides 401k or any of that stuff, but taxes: federal income tax, Social Security, and Medicare. But people don't realize that their bosses, the owners of the company or the company actually matches the Social Security and the Medicare.
Yeah, it's
until
huge.
the Social Security reaches the max, but that's like $150,000 this year. What you don't realize when you're self-employed, you're the employee and the employer at the same time. So you got to match it yourself. So you're going to get hit with a 15.3% tax. Here's the downside to that. I have a lot of realtors over the years. They didn't make a lot of money. Now, realtors either make a lot or they don't make any, especially the part-timers. Well, sometimes say you're married couple and you make $15,000 net profit as a realtor. Well, your standard deduction wipes that out. So you're not subject to the income tax, but you're subject to the 15.3% self-employment tax on that 15 grand.
Yeah.
People said, but I made no money. How do I owe 15,000 times 15.3, which is my little calculator here? That's $2,300 in tax.
Yeah.
Nothing you can do about it. Now, you may have earned income credits and things like that, but that is the biggest thing that I hear is, how do I pay tax if I made so little? You don't pay income tax. Again, same thing. All right, sub S, no self-employment tax, period. It's on your wages.
Yeah.
This is where we're going to talk about wages, reasonable comp. The law says that everybody who works in a company has to earn a living. Now, if you're totally losing money and there's no money coming out, then you don't take a salary. And there are some court cases that have said, yeah, you have to get paid. Because if you hired somebody to do your job, even at a loss, wouldn't you pay them? Yeah. So there's a weight you have to do. So, but in this case, why do we have to take a salary if we're making money? Can't we just take distributions? Well, for income tax purposes, it doesn't matter. Because what's the difference if you pass through $100,000 of income or it's on your W-2? You're still getting taxed income tax-wise of $100,000. But if you just take the money out, what are you not paying?
Social Security.
Okay? So multiply $100,000 times 100,000 businesses times 15.3%.
Yeah.
That's billions of dollars. The biggest part of the tax gap is this. So now the IRS looks at reasonable comp. What would you pay somebody to do your job?
Yeah.
Now, what is your job? Let's use a realtor. Selling, advertising, doing the Joe Rosen show, balancing your checkbook. I do 7 things in my business, so I have to put down what I do. So reasonable comp is very important to discuss with your tax professional. C-Corps, same thing. But they don't have reasonable comp. And this is the converse to an S-Corp. Now, why? Because distributions are called dividends. Like you get from Microsoft, you get from IBM, you get from Apple, you get dividends. Now, what are dividends? Dividends are a distribution of the company's profits. Now, do you pay tax on dividends?
Yeah.
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 Sure you do.
Yeah.
If you get a
Okay.
dividend from IBM, you're going to pay tax. You may pay long-term capital gains if it's a qualified dividend on your 1099 DIV, but you're going to pay some tax. The corporation gets no deduction. So if you own that, the corporation is going to pay tax, and you're going to pay tax. Besides Florida.
Yeah.
So it's a double taxation. So that's why I say we lean away from C-Corps for small businesses.
Let me ask you two questions here. So with the number one, this is less. I mean, I think I know the answer, but I'm not paying Social Security tax as an S-Corp. So that means when I'm 60 whatever years old, it'll probably be 70 by the time I'm there. My Social Security is going to be nothing.
That's
correct?
right. That's the downside.
That's the downside.
But you're going to get caught a long way before that. If you're showing profits every year, I guarantee you're going to be audited.
So that brings me on. So if you look up what the average realtor makes, I mean, can I claim to be an average realtor? The average realtor makes $9,000. Can I pay myself $9,000?
No.
So what am I worth? Who dictates that?
$9,000 in salary.
Yeah. Oh, so I can take $9,000 in salary.
That's salary. If that's what your net profit is.
Well, I'm just saying it's what an average realtor makes.
Okay. What would you pay if I owned the company?
Yeah.
And I hired you to be the average realtor. What would you make? What would realtors are weird because of the 1099 versus W-2 issue.
Yeah.
But what would I pay you? I'd pay you $9,000.
But how does a top realtor get away with that?
Well, remember what I said at the very beginning. Everybody's situation is different. You would not be an S-Corp. You could be a limited liability company, but I'd make you a Schedule C.
Okay.
So there's no payroll. Because then you got to file a corporate return in that scenario. But that's why I say when I do this presentation in front of people, this takes a half hour, 35 minutes, depending upon questions. The next 30 minutes, I talk about their goals. What are they doing? So if you said to me, Jeff, I'm only making $9-10 grand, I'm only working this part-time, you are not going to be an S-Corp.
Yeah.
The cost of doing payroll, the cost of making deposits, the cost of me preparing an 1120S will outweigh anything you save on that Social Security.
Yeah, it makes sense.
On that SE. But if you're making 90 grand, then we got to talk about playing the float.
Yeah.
How much do you take in salary versus distributions?
Yeah.
So that's why I was saying at the beginning, everybody's situation is different.
So how do you look up what somebody should be taking as a salary for themselves?
There are various, you look at the Department of Labor.
Okay.
There are many different things. There's a company called RC Reports.
Yeah. RC
Reports is a preeminent expert on reasonable comp. They look at all different things. There's charts. There's a fee you pay. Most of the accountants or attorneys use them, and especially if you go through an audit, and they will back up their numbers on an audit.
Yeah, it's just rcreports.com, right?
Right. When I teach classes on reasonable comp, I talk two codes, Internal Revenue Service, IRS code or statutes, and I talk about 40 court cases. Because there's nothing in the code that says how much to take. It's all subjective. You got to look at the different cases, what the courts would look at.
Yeah.
And there are some cases that are not precedent you can't use, but most of them are. And you can go back to an auditor saying, well, I'm following the glass stone case.
Yeah.
Okay. Or the Stinger case. So there are a lot of cases out there that you have to hang your hat on.
Gotcha.
All right. So let's talk about partnerships. Now again, Joe and I are partners. No incorporated entity. We're not even if we're an LLC, we want to be a partnership. If I do not, I'm not a realtor, so I cannot material participate in the realtor side. I'm just an investor. I think Joe is going to make $1 gazillion. We're going to sell this off to Keller Williams, and we're going to make $1 million. And since I own 60%, I'll get 60% of $1 million. I do not have to pay self-employment tax on that because I do not materially participate. But since Joe does, he will. That's the difference. I'm not a worker bee. Remember, I said you have to work in it. I am not self-employed in that business. I just sat back and I handed you money and you worked everything. The only thing I do at the end of the year is say, wait a minute, you only made $50,000, you're fired.
Yeah.
Okay, so that's the difference there. All right, next step. All right, there are no W-2s, meaning there's no salary as a Schedule C for the owners, period, end of story. You also do not send yourself a 1099. It's your business. How can you be an independent contractor of your own business? Same thing there. As an S-Corp, there are W-2s for members under reasonable comp, but you do not give yourself a 1099. If you have realtors listening here, they get 1099s from their brokers.
Yeah.
If you pay yourself, you do not give yourself a 1099. It's an oxymoron. How do you get a 1099, which stands for independent contractor? How are you an independent contractor of something you own? That gets rid of the word independent.
Yeah.
So, but you can issue 1099s to everybody else.
Okay, but if I'm paying myself a reasonable wage, am I W-2ing myself?
Yep.
Okay, gotcha.
You are an employee. You gotta split yourself apart. Joe Rosen, owner. Joe Rosen, employee.
Got it.
So as an employee, the owner gives you a W-2.
Okay.
That's how that works. C-Corps, absolutely. But you see, I wrote the word cannot be excessive. Now let's put this in your mind's eye. This is where S-Corps and C-Corps, you can play it against each other. The reason why the IRS does not want C-Corps to pay an excessive salary is because they want to deem part of that a dividend. So it's not deductible by the C-Corp and taxable by the recipient, double taxation. So we go to them saying, wait a minute, the same company, if it was an S-Corp, you'd want us to pay $1 million. But because I'm a C-Corp, you don't? You can't have it both ways. Will they buy it? Depends on how argumentative you are and how good you are. I have an attorney friend who has argued that, and he taught me that trick. So that's why I give a little bit less than reasonable comp. And if for C-Corps, take whatever you want. I don't want distributions. So that's something you have to consider.
Okay.
Again, same thing. W-2s, yes. Okay. Now, here's where there's a big wrinkle in partnerships. No W-2s. Remember, a partnership are two self-employed individuals, one entity. You're taxed on the bottom line, subject to self-employed, assuming you both material participate. But let's use this as an example. I'm the broker, and this is a true story with one of my clients. Both are realtors, husband and wife are realtors. He owns 95% of the company. She owns 5%. Why? She's the broker. But you can't be a broker of something you don't own. But she is the realtor too. He doesn't do any real estate. He's only a realtor before they got married, and he kept it because it's a real estate office, and he can if he wanted to. But she's the actual salesperson. All the other 1090 realtors report to him. That's why he's a realtor. It's really his team.
Yeah.
But he doesn't want to be taxed on her income. So we guarantee her payment based on whatever she pulls in. Instead of giving her a 1099, it goes into this line 2, called guaranteed payments. The company gets a tax deduction, and only she's taxed on it. So it's the same as getting a 1099, but she's a partner, so she can't.
Yep.
That's how you do it.
Okay.
It's not that common. There are other circumstances in other businesses, but you have a lot of realtors and you're a realtor. So I'm trying to connotate it to to put that together for you.
Yeah, that makes sense.
That's a rarity, but that's something how it works. Next slide. All right. Again, distributions. As a Schedule C, you make $1 million, you take $1 million out. Nobody cares. You're taxed on the bottom line. So Joe, take that $1 million next week.
Okay.
You can take whatever you want, whenever you want it, whatever you want to. You don't care. You can leave it there. You're still taxed on whatever your net income is. Same thing as an LLC, Schedule C. No difference. S-Corp. All right, distributions. Now we're getting into what's called basis. Basis means the monies you contributed plus your profits, which has to be a positive number. So if you put nothing into the business and you had losses, a lot of startup companies have losses.
Yeah.
There's no basis. So if you take money out, now let's assume you bought a lot of things on credit cards. So you left the cash in the business and you're paying your minimum credit card. So you still have $20,000 in cash, but you took a $30,000 in losses. That $20,000, if you take it out, becomes a long-term capital gain. It's called long-term capital distributions in excess of basis.
Yeah.
So you have to track that. And I have a couple of clients who, he's a builder and he's using the customer deposits to pay other bills until he needs it. And he's basically almost playing like a Ponzi scheme, but it's legal. He's not telling anybody falsehood. He's just using other people's money. And as long as he builds the house, nobody cares.
Yep.
But he has losses and he can't take any money out.
Yeah.
You cannot even deduct the loss if you have no basis. It's called suspended. Yeah. So you have to be careful in an S corporation and in a partnership. You have to have this thing called basis to be able to deduct the loss or take money out.
Okay.
C-Corps, same thing. The company has to have what's called earning and profits. I'm not going to get into all that. That's that's intermediate accounting, advanced accounting. Earnings and profits, a lot of people think that's your net profits or retained earnings over years. It is not. It is an accounting gap, crazy calculation. That's why I didn't become an accountant. I became a tax person. But again, this double taxation. They get no deduction, but you, the recipient, pays tax. S-Corp, C-Corps, and this is where the partnership, the same thing as an S-Corp, as I said before. Now, I put partnerships here. Again, remember, a partnership can also be under a limited liability company.
What's the difference between basis and profit?
Well, here, profit is a year by year.
Yeah.
Basis is what you put into the company as a capital contribution.
Okay, I forgot about that.
Right?
Okay.
You put 100,000 is to open up an office. Right there, that's 100,000 of basis. You have profits, but you took money out. So that's really another definition is your retained earnings.
Yeah. Okay. I get it.
If you look at a balance sheet, it says retained earnings, capital contributions in excess of a par, and capital stock. That's your basis if you're the only one.
Yeah. And
there are some weird ways of it going up and down and quote inside basis, outside basis, and that's not for this. That's not even for the experienced tax person.
All right.
All right. There is no state licensing. I'll get into what that means, but you do have to get at least a county license for the most part. And depending upon where you live, if you're working out of the house or where your office is, you may have to get a local. When I was in Port St. Lucie, I was at the corner of Port St. Lucie Boulevard on US 1. There's a little triangle. It's now used to be called, it was the original Riverside Bank building. Then it became TD Bank buildings. Now it's some credit union. That is, believe it or not, that is unincorporated St. Lucie County. I did not need a Port St. Lucie license. You go across the street or go behind me, that is Port St. Lucie.
Yeah.
It was the weirdest way they did that. But I say myself, $15 a year.
Yeah.
But you just have to check where you are. When I moved here to Stewart, I pay Stewart and I pay Martin County. All right. Again, same thing here. Now as an S-Corp. All right. And matter of fact, let me go back one. Matter of fact, that's an error. Even though you're a Schedule C, limited liability companies have to pay an annual report. And I'll show that that's here. The limited liability company, you have to organize and you file an articles of organization. And if you get the certified copies, it's $160 when you set it up. Then every year by May 1st, you have to file online what they call an annual report. Sometimes they call it uniform business report. It's $138.75 for a for-profit company. If you're an exempt or not-for-profit, it's $62.50. Okay. But you always, no matter if you're an Inc. or an LLC, you have to follow this form. All right. And you have to pay for it whichever way you choose. If you choose a Schedule C, Sub S, or partnership under this limited liability umbrella, you have to file this return. C Corps are a little different. You have to pay the state. You have to buy what we call the Black Beauty. Now, some people say you should buy this Black Beauty if you're an S-Corp. Now, what is the Black Beauty? The Black Beauty is your corporate kit, your corporate books. It has your stock certificates, your corporate seal. Sometimes you have pre-printed minutes, and you just got to fill in the blanks. Minutes are important with the IRS, and the same thing with lawsuits. Who elected the officers, or who elected the members, who elected what bank to use. You need to have, even though it's not required for LLCs, you should have board of director meetings every year, even if it's just you and your spouse. Even if it's over Thai dinner. Example, my father-in-law is a member of the board of directors, has been since we set it up. Now, we go visit Bradenton once a year. We go to dinner, and we do talk business. So we have, and I write it up, and it's in my corporate book.
Yeah.
You should do that. This way, nobody compares. It's called piercing the corporate veil. Attorneys will try to do that at every step of the way to unprotect your assets. The annual report for a C-Corp is $150, a little bit less. And again, you have to get the county and city licenses. And we talked about this already, talked about that. There is nothing for a partnership. If you're just a straight partnership, if you're an LLC and elect to be a partnership, there is. But if you're just a straight partnership, there is nothing other than the county and the city.
Okay.
All right. All right. Schedule C, cost to set it up. Nothing, nada, not a dime. Do you even need a separate bank account? No. You should. It's good business practices. You don't know how many clients I yell when I hear they commingle their funds. It makes bad business practice to see how you have what you have in there. So I always say, open up a separate bank account. Now, a lot of people say, well, I don't want to open a separate account because it costs money for a business account. Don't. Open a separate personal account, and when you buy checks, put your name on it. Joe Rosen, Realtor. Doesn't cost you anything. It's a personal account. The bank doesn't care what's on the check.
Yeah.
When I was doing this part-time, when I was working full-time in corporate tax, I had a part-time business. I wasn't going to set up as a corporation. I did that all the time. I called myself Florida Taxman. That was all my checks.
Yeah.
I bought my checks from Cheap Checks or whatever they were called.
Yeah.
All right. Now, S-Corps. Again, I talked about the articles of organization. It's cost $160 one time. And it's from this point for 75 days is when you have to make the election to become an S-Corp. There are exceptions. So it's called a late election, but you have to be careful because it's not automatic. But you should make this S election, and it's a form you got to file, and all the shareholders have to sign it, although all the members have to sign it, same thing as an incorporation, within 75 calendar days of the date you say to the state, we're starting when. Now, an S-Corp, a C-Corp, and a partnership, whether it's a loan or an LLC, has to have its own federal ID number. You do not need a federal ID number for a Schedule C.
You say that last part one more time?
Sure. A federal ID number, which is like an entity's Social Security.
Yeah.
You need one for an S-Corp, whether you have payroll or not.
Yep.
You need it for a C-Corp, whether you have payroll or not, and you need it for a partnership. Because whose Social Security number are you going to use? Mine or yours? You can't put both on a business thing, on a tax return. That's a 1065 return, so you get a federal ID number.
Yep. Okay.
It's called a federal employee identification number, but don't let the name get crazy. It's like their Social Security number.
Yeah.
Same 9 digits. Instead of 324, it's 27. 2 numbers and 7 numbers.
Gotcha.
Same 9 digits. All right. Again, now they have articles of incorporation versus articles of organization. Basically says the same thing with slightly different terms. And again, we talk about the corporate kit. Why Black Beauty? Because in the old days, they came in one color. Now they come blue, burgundy, red, brown, and black. Some companies do. I don't think there's any designs on them because it's supposed to be an official document. But it comes with a corporate seal, your minutes. Sometimes they're pre-printed if you want them. Sometimes you write them up yourself. There are companies that actually will do this for you. But it's costly. It's not that hard. That's called corporate secretarial work.
Jeff, let me throw one thing out there. I got some people sending me messages through my DMs on Facebook. For whatever reason, on Facebook, you can't post a comment on here, but I do want people to be able to comment. So when Jeff's done here, you can come on and ask way better questions than I'm asking. If you've got a question you can't post, feel free to send me a DM and I will go check them here when Jeff's done and we'll answer those questions.
Absolutely. All right. So again, S-Corp is the same thing, C-Corp, and there's the partnership. There is no cost to set it up. You just got to get a federal ID number. It's called it with an SS4. You can do that online. A lot of accountants do that. Most of the time, you do not need an attorney, period. You do not need legal, what's that, that thing that, I can't think of the name of it, not Legal Shield, the company that has all these forms for you. They can do wills by yourself.
LegalZoom? I have no idea.
LegalZoom. You don't need LegalZoom. Because a lot of times these attorneys, what they'll do is they'll incorporate you, they'll organize you, and that's it. Yeah. They will not tell you any of this. They will not tell you about an S-Corp because they're not tax people. They will not even get you a federal ID number. They won't even tell you about your licensing, most of them. So go to somebody who knows what they're doing, unless you can do it yourself. All right. So that's really it of this whole thing. It is not a difficult situation if you have the correct person helping you. If you go to a CPA, an enrolled agent like myself, or an unenrolled preparer, not everybody does business returns. So they may do individuals. Just make sure they understand how to do a business return, because there's a lot more that goes into a corporate return, even a Schedule C, especially under the new law that passed under the Tax Cuts and Job Act called the Qualified Business Income Deduction.
Yeah. That's
a big to-do these days, and there could be a lot of planning around it. So if you see any questions on your DM, I don't see anything, I don't think in live comments.
Yeah, so on YouTube, you can comment, but on Facebook, where I've got a lot of local people watching, you can't. But I have a question. So if I come in and let me think of how to ask this. What's the difference going to be if I am an LLC, an S-Corp, a sole proprietor, whatever, compare them, I guess, and I want to file my taxes? Is there a difference when it comes to having a guy like you, a pro, actually doing my taxes for me? Is one going to be considerably more expensive than the other?
Absolutely. Let's just use an example. If a tax person charges you, if you're just a W-2, have a couple of 1099s, it's going to cost you $300-400, depending. Some less, some more, but that's roughly around what it's going to be. Once you put a Schedule C in there, and even if you do not have any fixed assets with depreciation or anything crazy, you add another 150 to it. So now you're in the 350 to 500, 550, depends on how complex it is. It has no difference how many zeros you have. You don't know how many clients say to me, but I only made 20,000. I said, okay, but you have 53 numbers on your.
Yeah.
Now,
I still got to do the work, man.
$200,000. So I charge you 5,000? He goes, of course not. And I go like this. He goes, oh, shut up. But an 1120S, because of the liability, a Schedule C is one form. There's the SC, that's two forms. An 1120S is 5 with multiple schedules, multiple subsections. Yeah. I charge close to $1,000 just for that.
Yeah.
Now, if you're basically just starting out and there's 3 numbers on it, no, I'm not going to charge that. But you get what you pay for.
Yep.
The people more expensive than me. I had a client that came to me, paid $2,200 for an 1120S. I almost fell off the chair. Yeah. I would love to get $2,200 for a corporate return.
Yeah.
But everybody's different. Some people charge $400.
So I've got a friend, he's asking me, we're Army buddies, right? He's still in, and he doing XCs. Okay, so he wants to file his 2019 taxes. Can you help him over there?
Is that Paul?
Yeah.
Okay, I see him. I see what it is. All right. For those who's not sure what he said, he's an expat or expatriate. Oh, there it is. What an expat is a U.S. citizen living abroad.
Yeah.
If you're a U.S. citizen or what's called a resident alien, and even if you're living abroad, you can still be a resident alien in the United States. You have a green card. But once you're one of those, you're taxed on your worldwide income. Yes, I can prepare, and I have done many U.S. citizens who live abroad. You also have to file your foreign bank account report or the FBAR or the FinCEN if you have a certain amount of money in banks overseas. So that's a lot of big headaches for expats. Now, if you're filing overseas, for example, I have a client that works in Canada, lives here, works in Canada. So I do not do Canadian returns. I refer that out to a very good friend of mine who has a company that only deals with foreign returns. So I do up to a point. She does the Canadian returns, or her firm does the Canadian return, then comes back to me so I can compute foreign tax credits or any of those other benefits you get for living overseas. And they're very technical. But yes, you have to file that FBAR. If you have over $10,000 at any 1 second in a foreign bank account, you have to report. There's no tax. It's a reporting. But it's to tell the IRS that you have this money there. And yes, we can file your 19 return no matter where you live. We have a portal. There's emails, there's faxes, and Joe knows my portal. It's all very secure.
Yeah. Yeah. Okay. This is so interesting to me, but it's, I have a mathematical mind, but there's so much to it, and there's so much you don't know. And it's not like, do I want to buy this car or do I want to buy that car? And you can just look at, do I care about gas mileage or do I care about performance? It's not that simple. Like, there are so many different aspects to it. It's really challenging. And in my opinion, you really need a Jeff that you can trust, who knows all this. You can kind of tell him what it is you're looking to do and how much you're looking to make and all that. And you kind of nudge me in the direction you think I need to go. But it's a challenge, man. I mean, other than doing that, how else would you figure all this out?
Well, basically, you don't know what you don't know.
Yeah.
I correct more. TurboTax is my best friend. I do more amended returns because of TurboTax.
Yeah.
Yes, it asks you questions, but unless you know the next thing, you won't know how to answer it sometimes.
Yeah, it's true.
And you may be missing something, or you may misinterpret something.
Yeah.
You may get into capital gains. How do I determine what my gain or loss is? Or how do I calculate the tax if I have capital gains?
Yeah.
It's not just your income tax. What about the credits? Am I eligible for earned income credit? Can I take the child? You know how many people still are asking me, can I get a deduction from my child? No, there are no exemptions for children anymore.
Yeah.
There are credits. Well, what's the credit? And what's the age limit? What about college tuition? How many of you people out there have kids in college or going to college?
Yeah. Yeah.
Can they take that? What about student loan interest? So if you have just one W-2 and a couple 1099s, go buy yourself TurboTax.
Yeah.
Anything more than that, let the buyer beware.
I hear you, man. Paul's writing, Jeff, I need to chat with you for sure. So you'll probably hear from Paul. He's a good friend of mine.
I'll take care of him.
Yeah. All right. Well, Jeff, I really appreciate this. If somebody wants to get in touch with you, what's the best number they can reach you at?
772-337-1040.
Guys, I just wrote that down in the comments, so you can check that out. Feel free to contact him anytime. Down in Stewart, just a great guy. I trust you a ton. It's been a great relationship so far, and I appreciate you coming on here and just filling our brains with all this good knowledge.
I appreciate it. Thank you very much, Joe.
All right, my friend. Have a great night.
You too.